Hi. So today in this video, I'm going to discuss about the job profile of a risk manager at an investment firm. So I have taken a job profile, and I'm going to discuss what are the requirements for such a role in an investment firm. So like most people know that if you're going to work as a risk manager, you work at a wholesale bank or a retail bank or an insurance company or a consulting firm, but you could also work as a manager at a trading firm or an asset management firm. Not many people know that. A lot of people don't know that even the private funds do hire risk managers, although not in large number, unlike the big banks, but they do hire. Right, the requirements are a bit different compared to the requirements in big banks. If you're going to work as a risk manager in big banks, a lot of the work that you will be doing will be regulatory driven. Okay, whereas if you're going to be working as a risk manager at an asset management firm, most of the work will not be regulatory driven. Okay, so let's discuss actually what the details are. So I've taken a job description, and it's a job profile at this investment firm called Insight Investment. It's an European-based investment firm, and they do have this opening, investment risk manager, and they're looking to hire someone in London. So it starts with what the roles and responsibilities are. So as a risk manager in the asset management firm, you will be expected to do a number of things, right? It's not a role where you just do one kind of work. You'll be doing a number of things. It's not a front office sort of a role, by the way. You will not be taking decision on behalf of the clients. You will not be taking decision on where to invest money and all that. Your job will be more about challenging some of the decisions, ensuring that you have proper control on all the decisions taken. So it's again very second line risk management work, if you understand what first line, second line risk management, wherein you assess the risk involved in the decision making process. In the case of banks, most risk managers work on the lending side, so it's about decision on the lending, whereas in asset management firms it's more about decision on investing, right? So you challenge those decisions, right? So it starts with, okay, you will be doing portfolio risk analysis. You'll be writing reports on risk involved in the given portfolio, and you'll also be writing reports on whether there are sufficient controls in place for the risk management, right? And this particular role is on the fixed income strategy. That means it is a product specific role. You will not be working in equities or commodity. You will be working in the fixed income area of the fund. So you'll be doing a lot of things, not just doing portfolio risk analysis. You'll also be doing reporting activities. You'll be also you'll be part of many committees, investment committees. A lot of this, it's not like a fund manager can simply go and buy some assets directly. Before buying, he has to discuss with a committee, and you will be part of that committee, and you will be giving your views in that committee, especially on risk involved with particular to that given asset, but also in the larger context of the portfolio. Okay, so it's very analytical work, very hands-on work, and it's not like something you'll be managing a lot of people there. You will be a risk manager, senior risk manager, so you are expected to be more experienced here, right? And in case of conflict of interest, in case of disagreement with the front office people or the fund managers, you will be escalating to the line management or to the head of operation, head of the investment committee, or whoever is heading the department, right? That's very important. That means you need to be having a thick skin in order to be successful in this kind of role, because you may have conflict with the fund manager. Fund manager wants to go ahead with an investment strategy, but you are not too sure about the risk involved. You probably assess the risk is more then it is assessed by the fund manager, and then you will say no to that, and that may not go well with the fund manager, and he might not like you. In that kind of a scenario, you will have to escalate the matter to a committee where it will be discussed with more number of people, and then a consensus can be arrived at before going ahead with the decision, right? So it's a role that requires also quite good soft skills. That means you should be really confident, you should have enough knowledge about the products. This is a role on fixed income securities, so you need to be really good with fixed income, and you should have enough knowledge about fixed income products, and the risk involved with respect to the fixed income products. Example being, how interest rate and inflation affect these products, whether these products are immune to macroeconomic uncertainties, geopolitical uncertainties or not, right? So even in fixed income product, you have default risk. How do you assess the default risk? So you need to be really good as subject matter expert. You should have good knowledge of that. So that's important, and beside that, you need to have good soft skills. Okay. Then there is another requirement, which is being proactive in the pursuit of improving data quality and modeling approaches. That means you'll also probably will be developing some models. It could be, let's say, forecasting inflation, forecasting interest rate, or just basic models assessing the the risk involved in the portfolio, calculating the different Greeks in the portfolio, right? So that kind of work you will be doing. So you'll be working with a lot of data and modeling stuff. Unlike in banks, where many senior experts get away with doing hands-on modeling and data related work, here in asset management firms, it's a small team, right? You will not have junior people doing data quality assessment for you or modeling for you, right? You will have to be hands-on, you have to do the work yourself, right, regardless of your seniority. So that's also another good thing, but also a challenge for some of the risk managers, because I know a lot of the risk managers who work at big banks and insurance companies, they don't do hands-on work when it comes to doing work on data or modeling. All right, so you'll also be doing regular reporting, ad hoc client reporting. All right, so you will help drive the ongoing and continued improvement of risk and analytics within the firm. So we'll be directly working with the data team, or probably the data science team. They may have specialized data science team. You'll be working with them, review and validate proposed pricing and risk modeling changes, and ensure relevant documentation approvals have been completed. A creative approach is required as the firm continues to develop new business strategy and solutions. So you will also be expected to do a lot of maintenance work, like if they already have frameworks, methodologies, models in place, and if something is required to be changed, you will have to review it, and you have to assess if the change is correctly done or not. So this is more like doing a validation work. If you have ever worked in finance, you know that every work has to go through validation or review, right? This is also one such type of role. Remember that in regulatory driven environment, the validation work is very different, wherein you will have to have you will have a checklist and you will do according to the checklist. But here you have to invent everything yourself. Like there won't be any checklist from the regulator. There will not be any prerequisites from the regulators. So here you have the luxury of inventing things yourself, but at the same time it's also a challenge that you have to come up everything yourself, and you have to foresee what could be potential issues in the future and what the proactive steps can be taken in advance, right? So you'll also be doing some testing work, like testing of risk analytics system, ensuring that all the risk exposures are visible, controllable, intuitive. So in investment firms, there are like a lot of checks and balances have to be there in place, and you will be doing that. right? So it is not just intellectually challenging role, it is also a role which is operational driven. That means you'll be doing a lot of operational work, administrative work, right? A lot of people don't like such work, but whether you like it or not, this is part of the job, and you will have to do it actually, right? Collaborate with high performing team, interacting with wider stakeholders. So as I've said, you need to have good stakeholder management skills, you need to be good with soft skills, you should be able to communicate well. Any miscommunication can lead to problems in investment firms. So you should be able to write well, speak well, there shouldn't be any confusion, and if there is one, then you should escalate well in time. And yeah, these are skills needed. You'll be part of the risk governance committee, as I was talking about, right? There are always some committees for decision making, and you'll be part of that. So one way to influence people is to be a good presenter in those committees, and whether it's raising concerns or promoting some open discussion, you will be doing all of that. And yeah, so as a risk manager, you are supposed to challenge a lot of these decisions which are very risky, right? All right, now let's come to what kind of experience or qualification needed, right? So what they have mentioned is that they expect someone with relevant experience in a risk role. This is not a fresher role, this is an experienced role, so you're expected to have experience with risk management. But they're not too particular about your experience in asset management. If you have experience as a risk manager in insurance firms or investment banking firms or asset management firms, then you can indeed apply for these roles. I mean, although experience in asset management industry is preferred, it's not a prerequisite, and you can come from banking world or insurance world or consulting world. You need to have solid understanding of mathematics. You need to have undergrad or postgrad in a STEM subject or economics or finance. That's what they mentioned. STEM is science, technology, engineering, mathematics. As I have discussed many times on this channel, in finance, people from technical background are preferred. So you need to have a scientific background, a technical background, computer science or engineering or physics, mathematics, economics, finance, right? But you need to be good with numbers. That's the point here. You also are expected to have good knowledge of financial markets and products in the financial market, especially in the fixed income area, right? Bonds and different kind of bonds, the risk involved in the bonds, how to assess, what kind of Greeks involved, and how to interpret the results from the risk assessment. So all that is important. If you have ever done FRM or any of these risk management courses, all these things are covered. Even in my course that I offer, a lot of these things are covered. You need to be good at problem solving. Analytical skills are extremely important. Well, it's a quantitative role, it's not a quant role as such, but you are more of a risk manager, but you will still be doing some quantitative work, so keep that in mind. So you need to be having some knowledge of quantitative modeling, right? I also see people from management background like MBA finance, they also work as risk managers in investment firms. I have seen some of them. Okay, so that's regarding regulatory knowledge, right? That's one question you probably be having, right? In banks and other firms, such firms, there is an expectation that you should be comfortable with the regulatory requirements, but that's not the case here. But if you have some knowledge of some market regulation, some of the best practices from market regulations, whether it's from Basel rules, or if you have some bespoke regulatory requirement from different central banks, then it's well and good, right? These are the requirements. It's a standard job, as in it's a very typical risk management profile. So they are not expecting you to be a manager of a fund. They are not expecting you to be super good with modeling, although knowledge of modeling is important. They are not expecting you to be amazing at programming. There is not even any mention of programming here. That means you're not supposed to be great at or expected to be great at Python or C++, but you should have a STEM background. That means you should be able to learn some programming and do some data analysis yourself if required. But it's not a specialized role there. I think a lot of the risk management roles are like that. But I also know that for most of the risk management role, you are supposed to have some programming experience, like writing SQL code or doing some basic analysis using Python or Excel or MATLAB or SAS or R, right? All right, so that's about it. If you have any questions, as always, let me know in the comment section. If you're interested in my course, let me know. The details are there in the comment section. Thanks, guys.